Hello, everybody. It's good to see you. It's Tuesday, November 23rd, just a couple of days before Thanksgiving here in the United States. I want to start by saying happy Thanksgiving to everybody so that I don't forget to say that at the end. I am Annie Brock, and I am whoops, one second here. I have noise coming from the left side. There we go. Okay, so I am Annie Brock. I'm the president and CEO of the Leader Transition Institute. We are a 501c3 organization headquartered in Maryland, but we serve globally. We prepare and walk beside people who are making major pivots in their life with a special focus on service members, veterans of any era, their spouses, and Gold Star spouses and family members, helping them to transition into the civilian sector. We host on a monthly basis in the virtual arena a program called Changing Focus, Moving from We to Me. It's designed for service members and their spouses who are actually in the midst of the transition process. In addition to that, to stay connected and continue to serve our alumni, we provide monthly sessions such as this one, where we give more information about the transition process and then additional information that will help them as they go forward in their lives. 4 times a year, we focus on the financial arena, providing information that is related to service member and veteran and military retiree pay, benefits, those kinds of things. Today, we are fortunate to have Michael Hunter and Tony Guzman of the Aligned Education Foundation to talk with us about the VA home loan benefit. And I'm going to bring them up now. Welcome to our time together, Michael and Tony. We appreciate you spending your time with us today.
Thank you. Thank you very much.
Yep. Thank you, Annie.
Well, what I am going to do is I am going to turn it over to Michael and Tony and fade out, and we're going to put up their slides. And if you have questions, please put them in the chat and we'll monitor that. The floor is yours, gentlemen.
All right. Well, thank you, Annie, and thank you for the invitation. We, Michael and I, we love helping veterans. We're both retired, but we're still serving. I retired back in 2018, and I started working for this organization, teaching on the VA home loan benefit, because it's a lot of bad info out there. A lot of people are going off what they've been told and not understanding the VA home loan benefit in its entirety. And we recruited Michael to come on board. He just came on board past couple of months. Retired Navy, Master Chief. Michael Hunter's retired Army, Command Sergeant Major. So we're both still serving our community. So this is our education nonprofit. It's called the Aligned Education Foundation. And again, we go around and we teach on the VA home loan benefit, right? So this is the truth about your VA home loan benefit. Our goal as an organization is to ensure that any individual who's worn the cloth of our nation has an opportunity to own a piece of it. We truly feel that way. If you don the uniform, if you serve this country, you should own a piece of the land that you help defend. Before we get started, like Annie said, if you have any questions, just drop them in the chat box. And if Michael can't, Michael will answer it. Either he'll answer it or he'll stop me and ask the questions. But feel free to ask the questions as we go along. Now, we're going to cover the when, who, how, and why of the VA home loan benefit. But first, a little bit of history, right? Where did this program get created? This program was actually created back in World War II, 1944, by Franklin Delano Roosevelt. So he did this so those service members coming back from World War II had the opportunity to purchase a land that they just helped defend. Now, the VA pamphlet 26 Tax 7 is the guidelines to this whole VA home loan benefit program. It tells banks, lenders, and credit unions how to write loans according to what the VA wants. All right. You can very easily Google this, the VA pamphlet 26 Tax 7. You can download it. Very boring read. But if that's something that you like to do, you can download it and read it. Chapter 4 is probably the most important chapter. That's the credit and income qualification chapter. Okay. Now, the VA guarantees your loan. They do not lend the money. All right. They guarantee your loan 25%. What does that mean and how does that work? Okay. If I'm here, so I'm here in San Antonio. If I decide to buy a home here in San Antonio for $400,000 And let's say after a year or two, I fall on hard times. I can't afford my home anymore. The market's bad. I can't sell it. I'm just going to walk away. That bank, lender, or credit union that has that home on their records will foreclose on that home. Then they're going to short sell that home. They only need to short sell that home for $300,000. Why? Because the VA is doing a 25% guarantee. They're guaranteeing that other $100,000 will be covered by them, right? Because the VA guarantees your loan 25%, that allows us, service members and veterans, to purchase a home, no money down. Whereas if you were to utilize FHA or conventional, you would have to put your own money down, right? That's your own personal guarantee that you're not going to default on your loan. So, and if you don't put at least 20% down, you're going to pay what's called private mortgage insurance, PMI. And I'm going to cover that during this brief. The Blue Water Navy Vietnam Veterans Act of 2019 has some significant changes to the VA Home Loan Benefit Program. The first and biggest change that took effect January 2020 is there's no cap on VA loans now for full entitlement, okay? Now, what exactly does that no cap mean, and how does it work? So if you have full entitlement, meaning you have never used your VA home loan benefit before, or if you used it previously and sold the home, it's out of your name, you get your full entitlement back. If you have full entitlement, there is no amount of money that the VA will not guarantee, okay? They're saying, hey, if you can credit and income qualify for an $800,000 home, they will guarantee that $800,000 home, and you don't have to put a down payment. I've seen loans as high as $1.2 million VA home loans with no money down. Now, would I suggest that? Probably not, but it is available, and that's one of the big changes, that no cap, all right? Now, if you do have a VA loan, right, and you want to purchase another home, you will fall under a cap, and I'm going to get into that here later on in this brief. Now, who's eligible for the VA home loan benefit? If you were active duty during wartime, and we've been a country at war since August of 1990, then all you would have to do is 90 days. If you were not active during this time, if you were active during peacetime, then you would have to complete at least 181 days. So those are the 2 days, 90 days, 181. Those are the two numbers you need to remember. Reservists and National Guard, a little bit different. So they need to they're eligible after 6 years worth of service. Okay. So they collect points, right? Points for the drill weekends, the 2 weeks that they do. So they need to show that they have at least 1 point in 6 calendar years for them to be eligible for this benefit, unless they get activated. If they get activated under Title 10 orders, federal orders, then all they would need to do is 90 days. President Trump, before he left office, also signed a bill that stated that any reservist and National Guard that was activated for the COVID-19 relief, all they would have to do is 90 days to be eligible for this benefit as well. Now, who else is eligible? If you were discharged for any kind of service-connected disability, no matter how many days you served, you're eligible for this benefit. Spouse of prisoner of war missing in action, also eligible for this benefit. And to me, probably one of the most important categories, an unremarried spouse of a veteran who died in service or from a service-connected disability. My background's medical, Mike's special forces. We've had friends that did not come back home from combat, right? Their spouses are still eligible to utilize that benefit as long as they remain unremarried, okay? A lot of them don't know this, okay? Why? Well, during that time, probably the most traumatic time they've ever had. So all these benefits that they're being told about, it goes in one ear, out the other. So if you know of a Gold Star spouse that is searching for a home and trying to go conventional or FHA, just, try to remind them, hey, have you ever taken a look at the VA home loan benefit? Because you still may be eligible to utilize that. Now, who can finance? The veteran themselves can finance, the veteran and the spouse, of course, and then 2 veterans. If you have a best friend that's a veteran that you trust, you can, combine your eligibility to purchase that home. Or if you have a relative, uncle, brother, your father, sister, anyone like that, you can actually combine entitlements. Now, the VA loan is a primary residence loan, meaning you have to intend to occupy that home as your primary residence. And in most cases, you have to intend to live in it for 1 year. After 1 year is over, if you want to turn that into a rental or an Airbnb or whatever you want to do, you can do that. You can actually move out, turn that into a rental, and then utilize your remaining entitlement to purchase somewhere else. So that is possible. You can have multiple VA home loans open at the same time. Don't let anybody else tell you any different. The certificate of eligibility, this is the request form. You can fill it out. You can send it into your regional VA office and hope somebody sees it and processes it and gets your certificate of eligibility back to you, or you could do it the easy way. The easy way is you get on ebenefits.va.gov. All your VA benefits are on that website, and you have to get on the website to do your disability claim. So get on the website, create a premium account. On that website, there is a Manage Your Benefits tab. In that section, there is a housing section on there. In the housing section, there is a spot where you could generate your certificate of eligibility. You just push the button, and in 10 seconds, you're going to get this. All right. It's going to tell you, it's going to tell the bank, the lender, whoever you're working with, whether your entitlement code, your funding fee, if you have any prior loans, your basic entitlements, and any conditions. Okay. Now, you see on this screen here that Mr. Sample does have a home active in Pennsylvania for $300,000. All right. So I also want to point out that if you see in the middle of the screen, it says this veteran's basic entitlement is 0. I have seen some people go to a bank, lender, or credit union and try to get another VA loan and are turned away because they're telling them that you don't have any basic entitlement left. You can't use the VA home loan again, which is wrong. If they told you that, you need to go find somebody else who knows the regulation, because there is a thing called second tier and bonus entitlement where you can use the remaining parts of your eligibility to purchase again. Again, we're going to cover that in the brief. All right, so just hold on just a second. Now, what can be financed? A lot of people think you can only finance a single family home. Then that could not be further from the truth. All right, you can finance mobile homes. You can do duplexes. You can do fourplexes, condos, new builds, construction. All this is available with the VA home loan benefit. If you were told no, it's probably because that bank, lender, or credit union doesn't offer it on that particular product. Not a lot of banks, lenders, credit unions will offer VA loans on mobile homes because they think it's risky. Duplexes and fourplexes, same reason, right? Duplexes and fourplexes, they're huge here in San Antonio. I'm not sure wherever you are if they're as popular, but we have a lot of active duty and veterans purchasing fourplexes. 3 units are already rented out. They live in 1 unit for 1 year, and then they move out and put another renter in there, right? So this program was not designed to create a real estate portfolio or generational wealth, but there's opportunities to do it. You just have to be very careful if you go that route, because, the situation we're in right now, COVID-19, a lot of people lost their jobs. They couldn't pay rent, but the law said you couldn't kick them out, right, due to the circumstances. So you still have to make that mortgage payment. So if you choose to utilize this benefit in that way, just make sure you're financially stable in order to do that. Now, the status of the home, it has to be in good condition. You cannot chip and join against this, as I like to say. A lot of people are wanting to go out and buy a rundown $200,000 home, put $100,000 in it, and then flip it for $800,000. You won't do it with the VA loan. Why? Well, the VA is going to protect their investment, okay? They're going to send an appraiser out there. The appraiser is going to go off what's called MPRs, minimum property requirements, basically a checklist. It's the same checklist that appraiser uses for FHA and conventional and VA. The only stipulation is the VA is a little bit stricter on certain requirements within that checklist, okay? So it is a little harder. So if people are telling you to not go VA because the appraisals are hard, I would seriously question why they're doing it, because the VA is going to inspect that property. They not only want to protect their investment, but they also want to protect the veteran. The last thing that they want is for a veteran to get into a home and that 6 months later, there's some health hazards or some safety issues, all right? So the VA loan, I think the appraisal, if it's up to me, I would much rather have a VA appraisal than a regular one, because I know for a fact that they're going to check that property through and through. Now, why use the VA loan, and what's the benefits? Well, first of all, right, there's no down payment, okay? the 25% guarantee allows us service members and veteran to purchase that home, no money down. All right. 2, there's no private mortgage insurance. So private mortgage insurance is if you were to utilize conventional or an FHA loan, if you don't put at least 20% down, you will have to pay private mortgage insurance. We don't have that with the VA loan. Private mortgage insurance is usually about 1% of the loan. It doesn't go to the principal. It doesn't go to your equity. It just goes to the insurance company just in case you default on your loan. All right. So on a $300,000 home, that's $300 every month. If you put 3% down or 5% down, $300 every month until you get that 20% equity, then they'll take that PMI away. So total waste of money, in my opinion. That's why I feel that the VA loan is such a great loan for us service members and veterans. 3, there's no prepayment penalty. All right. You can strike it rich, pay off your home the next day, and there's no prepayment penalty whatsoever. There may be prepayment penalties on those other products. Why? Well, how do you think those companies make money? They make money off the interest on the loan. So if all of a sudden you pay it off, there's no money to be made. There may be a 6-month prepayment penalty on other products. 4, dual military entitlements. I don't know if we have any dual military in the crowd, but dual military is huge because not only that you have an entitlement, but your spouse has an entitlement, and you can actually combine leftover remaining entitlements to purchase another home. And I'm going to show you how that works as well. All right, VA loan myths. What have you been told about the VA loan? I've been teaching this class since 2018. A lot of bad info right out there. The number one thing that we hear, the number one bad information that we hear is I could only use my VA home loan benefit for my first home, or I could only use it once, right? It could not be further from the truth. You can use, if you buy with the VA loan and sell, you get your full entitlement back. You can buy and sell and buy and sell and buy and sell all day long, right? And it will not affect anything. Or if you buy with the VA loan and if you pay it all the way down to 0, you can on a one-time case ask the VA to restore your entitlement, and they will restore your entitlement, and you can go out and purchase another primary residence. Or if you do have a VA loan currently and want to purchase again, you can also do that. Multiple VA loans is an option, and here's how that works, okay? If you have a current VA loan and you want to hold on to it, and you want to go out and purchase another primary residence, right? It has to be a primary residence. You will fall under a cap, okay? Because you have partial entitlement. You don't have full entitlement. You have partial entitlement. So what is that cap? That cap will be the county loan limit for whatever county you're going to buy in. Now, 98% of the country is going to be 548,250, and that's going to change in January of 2022. I think it's going up to 629, I believe it is. But there's some counties on the East Coast that are higher. There's some counties in California that are higher. The whole state of Alaska is, I think it's in the 700,000s. Hawaii is like 700,000. So it's all going to depend on where you're going to move to next. So I'm going to give an example of purchasing a second home under the 548,250 cap limit because 98% of the country is going to be 548,250. So let's say I buy a home here in San Antonio, right? Let's say that costs $250. So basically, the math works out to, this is approximate, this isn't exact, all right? It's gonna depend on how much entitlement you were charged. But ballpark, if my home costs $250, I'm gonna subtract by $250 from the county loan limit, and that's about how much I have, all right? It may give or take, again, depending on how much entitlement was charged on your first home. But in this example, I have $298,250 remaining. Now, what if I need more than $298,250? Can I still use the VA loan? Yes, you can. You just have to remember that every dollar that you go over, you're going to have to pay 25%. Okay? So why 25%? The VA is guaranteeing their portion 25%. They want to make sure you're guaranteeing your portion 25%, if that makes sense. So let's say I move to Killeen, Fort Hood, and I buy a home up there well under that remaining entitlement limit. So that's 180. So that's how I can have multiple VA home loans open at the same time. So I have 2 under one entitlement, and I still have $118,250 left, right? But what if I was dual military? How would that work? Okay, again, assuming the 548,250, that will change based off where you're going. Dual military entitlement, spouse number one can put house number one under their entitlement. Let's say that costs 180. They want to keep that home, move on to home number two. Spouse number two can utilize their entitlement, $200,000. So two different spouses, two different entitlements. They want to keep both of those homes, go to home number three as a primary residence. They could either utilize spouse number one's remaining or two. It doesn't really matter. In this situation, we're going to utilize spouse number three's entitlement for $250. Spouse number two or spouse number one has two entitlement or two homes. Spouse number two has one. If they want to purchase home number four as a primary, keep those three homes as rentals, they can choose either to utilize spouse number two's remaining entitlement, $348,250, or if they need more, they can actually combine remaining entitlements. And in this scenario here, equaling out to $466,500 for home number four. Very powerful benefit if used correctly. Okay, I know a Lieutenant Colonel couple over here at Port San Antonio. They just purchased their fifth home a couple of years ago, utilizing their VA home loan benefit. So 4 rentals, and then they have their primary residence. Again, this program was not designed to create that rental portfolio, but there's opportunities to do it. Just please be careful if you choose to go that route. All right, credit score requirement. All right, what do you think the credit score is to utilize the VA loan? Can someone just either put it in the chat box? Mike, can you let me know what they say? What do you think the minimum credit score requirement is? Anyone? No one's answering, Mike? No. Okay. So a lot of people think it's 640, it's 620, right? Well, actually, Chapter 4, that credit and income qualification chapter, it's actually 0. There's no credit score requirement to utilize the VA home loan benefit. However, there's no bank, lender, credit union on earth that's going to lend you money without a credit score. But why is that a problem? Well, let's say I go to ABC Credit Union and I apply for a loan and I don't meet their credit score requirement. Let's say it's 620. What do you think they're going to tell me? You don't qualify for this loan, right? You do not qualify for the VA home loan, but we could put you into a conventional loan or an FHA loan, and that's that. So by them telling that service member that service member is going to go on thinking that I need a 620, and he's going to tell everybody else you can't use the VA loan because you don't have a 620, which couldn't be further from the truth. What they should have told him is you don't qualify with us, but you should shop around because there's other companies that may have lower credit scores. And there are. I have seen credit scores as low as 550, all right? So do yourself a favor and shop around. If you're worried about your credit score dropping, here's how it works. The first time you get your credit pulled by, let's say, a mortgage company, right, your credit score is going to take a hit. You have about a 30 to 45-day period, depending on the Equifax, TransUnion, and the Experian, to shop around as many companies as you want and get your credit pulled, and it will not affect your credit at all. That's your right as a consumer to shop around for the best interest rate. My opinion, I would probably take about 2 weeks and get about 3 or 4 different companies and then compare interest rates and also compare what fees are associated with that specific bank. So credit score is lender specific, all right? So don't, just because one person tells you no doesn't mean that's gospel, all right? All right. Third, there's always a funding fee no matter what. This is not true. There's 2 ways to get out of paying a funding fee. The first, if you have any kind of VA disability whatsoever over 10%. And 2, part of the Blue Water Vietnam Veterans Act is a Purple Heart Award. So those 2 items will get you exempt from the funding fee. So Purple Heart Award or any VA disability over 10%. Now, what is the VA funding fee? The VA funding fee is an extra percentage that you will have to pay to utilize this loan product. Well, how much is that fee? The first time you utilize this loan and you want to put zero down, it's going to be 2.3%. Your second, third, fourth, fifth, 100th, 3.6%. If you do have 5% to put down, you can choose to put that down, and you can knock that down to 1.65 on both. Excuse me. And if you had 10% or more to put down, you can knock it down to 1.4%. If I had to pay this funding fee, I would seriously consider 5% to knocking that down to 1.65. I wouldn't pay 10% though. I don't think that's worth the money. I would rather utilize my money somewhere else. Now, there is a well-known financial guru whose last name's Ramsey, does a lot of good work for people, getting people out of debt. But he actually, on his radio show, he had a military caller come in and ask about the VA loan. And he told him that don't utilize the VA loan because it's the most expensive loan. So we've tried to argue that. I disagree with them totally. But I'm going to go over a chart of a conventional loan versus VA. Funding fee versus PMI, all right? On a $500,000 home at a 680 FICO score, left side conventional loan, right side VA. Historically, the VA outperforms, meaning has lower rates than conventional loans, and that's what we have here. Now, the rates, don't fall in love with these rates. Rates change every single day, okay? They go up, they go down, they go up, they go down. Now, this just a scenario. All right. On the left side, conventional, I'm going to put $25,000 down. That knocks my total loan amount to $475,000. The PITI, which stands for principal plus your interest, taxes, and insurance, comes out to $25,32. All right. Now you're going to tack on PMI. It's usually 1%, but this is less than 1%. That's $412 a month every month until you get that 20% equity because you only put 5% down. That total amount comes out to $29.45. Right side, VA, zero down, but you're going to finance a little bit more, $11,500. So your PITI comes out to $24.88 because of the lower interest rate. Zero PMI, total payment $24.88. So on this scenario, you're saving about $450. Now, it might change based on different circumstances, different scenarios. But I will tell you, 9 times out of 10, probably the VA loan is probably the best option for you. If they're trying to convince you to go to a conventional, just ask them to show you the numbers. If the numbers make sense to go conventional, go conventional. If it makes sense to go VA, then go VA, right? It's that simple. Just do your homework. Now, how valuable is your BAH? I go over BAH tables when I deal with service members that are in. I can't stress the value of BAH because it's non-taxable. Government's giving you non-taxable dollar to buy real property. And at the end of the year, you could deduct your mortgage interest and your property taxes against your gross income and hopefully get more back on taxes. But I'm going to very quickly cover a 25-year career of a service member that comes in married with one dependent. So these duty stations are high. I know they're high duty stations for BAH, but I'll tell you where we got this from afterwards. So E2 San Diego for 2 years, the BAH is ridiculous at $26.91 for a total of $64,000. E3 in San Diego stays another 2 years, gets promoted there, $26.91 again for a total of $64,000 again. First 4 years in this service member's career gets close to $130,000 of non-taxable money. And do you think that 21 or 22-year-olds financially educated enough to utilize that the right way? Probably not, right? Okay, Honolulu, 4 years, 135, back to Millington for 54, back to Honolulu for 144, to Yuma for 69, back to Honolulu for a twilight tour of 203 for a grand total of $736,000. All right, a lot of non-taxable BAH. We actually have another command sergeant major that works for us at Fort Hood. He retired after 32 years. He calculated over $1 million in BAH that he was given. $1 million in BAH. And he's kicking himself in the butt because he never utilized the VA home loan benefit while he was in. He just purchased after he got out. Now, if this was taxable, you probably have to make close to $920,000 in order to get that non-taxable money. Now, again, those duty stations were high. Where did we get those duty stations from? Well, our boss, that's his dad's tours. Anthony Michael Diaz, multiple combat tours, did not own a piece of the land that he helped defend. He actually ended up living in a motel in Las Vegas before his son moved him back to Hawaii, where he eventually died of throat cancer. Now, Mr. Diaz is not the only homeless veteran out there. There's tons of them. And that's another reason why we're so passionate, is because we want to try to prevent this from happening, right? Now, if Mr. Diaz would have got this education, would that have changed his life? We don't know, but at least he would have had that education and hopefully made a smarter decision, right? And that's all we're trying to do, is trying to educate on this benefit. Now, what will you do with your BAH? If you're not receiving BAH, if you're already out, if you're renting, then what are you going to do with your rent money? Okay. I hear people tell me all the time that, you know what, I don't want to buy because I don't want to have a mortgage. Well, if you're paying rent, you have a mortgage. It's just not yours. Somebody's mortgage is getting paid off the first of every month. It's either you're paying yours or you're paying somebody else's. The question I have for people is, do you want to pay off something that's yours to pass down to your children? Or do you want to pay off something that's someone else's so someone else can pass down to their children? The choice is yours. Now, why do most active duty rent versus buy? Variety of reasons. The number one reason that we hear is home ownership is expensive, right? And I will argue that if you're paying rent, you're paying a mortgage. Whether it's an apartment, whether it's a townhome, you're paying rent, you're paying somebody's mortgage. A lot of people are worried about, the plumbing and stuff breaking down. Well, that's where you have to do your due diligence as well. Home inspections. Home inspections are different than appraisals. Appraisals are for the lender, for the financial institution. Home inspections are for you. So make sure you get a home inspection as well when you're buying a home, okay? Appliance warranties, those home warranties, some of those could be very good investments. So that kind of alleviates kind of the fear of, buying a home as well. Second biggest thing we hear, I'm only going to be here 3 years. Okay, well, how long are you going to be at the next duty station? And then the next, and the next. Next thing you know, 3 years turns into 6, turns into 10, turns into 15 to 25. And at some point, you might miss the boat on utilizing that BAH, right? Is there every place a good place to buy? Absolutely not. But I will argue that every place you should at least take a look at it to see if it makes sense for you and your family. Now, a lot of people, it comes down to fear, right? A scary process. We say it's false evidence appearing real. It's scary. It's scary buying a home for the first time, right? You don't know what you're getting into. It's the most amount of money you're ever going to borrow in your life, right? So it is stressful. But how do you overcome that fear? We tell people, hey, take a look at a few things. Take a look at how much is your mortgage going to be, because before you sign your name on the dotted line, you can kind of get what your mortgage is going to be for the next 30 years. Now, that number is not going to change. The only way it'll change is it can go a little bit lower if you refinance, right? Or if it could go higher if your property taxes go up. But historically, it's going to stay around the same, all right? Now, you take that number and you take a look at that number and how much it's going to cost you for rent, all right? And do your data, all right? Is it more cost effective for you to rent an apartment than rent an apartment? If it's more cost effective for you to buy a home, then buy a home, all right? If you're buying a home, always use a realtor. You do not pay the realtor anything when you're buying a home. They get paid off the sale of the home, right? From the sellers. So have your realtor do a rental market analysis. The rental market analysis will tell you that home that you're buying and how much it would rent for in case something happens. So if your mortgage payment is $2,000 and you could only rent it for $1,200 if something happens, it's probably not a good decision. All right. But if your if your mortgage is $2,000 and you can rent it for $2,000, you might be in a good spot then. Now, a couple of things to consider. Property management fees, right? You're going to have somebody manage that property for you, especially if you're not in the same state. I would probably not want to manage my own property just for ease of headache. Property management fees are 10% of the rent. Then you're going to take a look at homeowners insurance for investment properties, probably a little bit more expensive. You may pay $200 or $300 out of pocket. And when I tell people that, they get scared and they tell me, I hear it all the time, I'm not going to pay $200 or $300 to have somebody else live in my home, and they might tear it up, and then I'm going to have to repair it. But those same people are driving around in $700 car payments or $600 car payments on a piece of metal that depreciates every single day. So you mean to tell me you're not willing to put $200 or $300 a month into your own investment for somebody else to pay it off, but you're willing to pay $700 a month on a piece of metal? All right. Just a different way of taking a look at it. Now that covers the benefit itself. And I know we're running out of time. I'm going to cover real quickly the steps you need to take on if you choose to utilize this benefit and what questions to ask. First, you want to find somebody that you trust. Okay. Find a loan officer that you trust that knows a lot about the VA home loan benefit. I will argue that if you utilize the same people that you do your banking and checking with, savings and checking with, they probably are not too savvy, or they probably are, but they have high fees. All right. So just because you've been with them for 25 years doesn't mean their mortgage process is the greatest, and they might, again, charge fees. So find somebody that you trust. You want to get pre-approved, not just pre-qualified. Big difference. Pre-qualification, I could give you what I make over the phone. I could give you all my debts over the phone, right? If they give you a number to go shopping with after a phone call, that is not a good number to go shopping with, okay? That is a pre-qualification. That's not a pre-approval. You're going to have to turn in these documents. Certificate eligibility to see if you're eligible. DD-214 and points total if that's applicable. W-2s, pay stubs, bank statements, tax returns. All this you're going to have to turn in, okay, if it's applicable to you. After you turn that in, then the whoever you're working with is going to give you a pre-approval. That's the number you can go shopping with. Now, this is test number one. I tell people, if you can't get this info and turn it in, then you have no business buying a home. You're just not ready. That number that they give you, that's the pre-approval number. That's what you can go shopping with. After that, then you find a realtor. Make sure your realtor is savvy on the VA home loan benefit as well. Just because they're a veteran realtor doesn't mean they're always savvy on the VA home loan benefit. All right. Ask them questions from this brief. Ask them how many VA transactions that they've done. Okay. Once they take you out and you find a home, you make an offer. If they accept the offer on your home, then you're going to go under contract. Once you go under contract, they submit your realtor is going to submit the contract to your loan officer. Loan officer is going to do a full loan application, going to send it to processing. Processing is going to do checks and balances, going to verify your income, verify all your bank statements, make sure you're not doing any money laundering, any of that stuff, making sure everything is legit. Once that is completed, they're going to order the VA appraisal. VA is going to send their guy out there, do the NPRs. The appraiser is going to send it back to the VA. VA is going to take a look at it. They're going to issue an NOV. It's called the notice of value, okay? The VA is going to send that notice of value back to the bank, lender, credit union. It's going to say, hey, the VA will guarantee this loan at this amount, and if there's any minor repairs that need to be completed. If it's major repairs, the VA might not guarantee that loan, okay? If the NOV comes back lower than the sales price of the home, you have a few options. You can A, walk away. B, ask the seller to reduce the sales price of the home to the NOV. C, agree to pay the difference between the appraisal and the sales price of the home. Or 4, you can ask for ABC4, right? ABCD. D, you can ask for a reconsideration of value. A reconsideration of value is where your realtor can get comps of other homes that sold in the area and submit it to the VA in hopes of raising that NOV, okay? They have 4 days after the realtor turns in that to get you a word back. So, sometimes it works in the favor and sometimes it doesn't. So it's just if your loan comes in or your appraisal comes in lower, that's one of the options you have. If your NOV comes back higher than the sales price of your home, you have instant equity. You don't have anything to worry about. All right. Then after the loan officer receives the NOV, then he's going to send everything under underwriting. Underwriting is going to do the final loan approval. Then they're going to schedule the closing. That's when you go to the office and you sign like 10 billion documents and you get arthritis from signing all those documents. After that process, from the time that you submit the contract to the loan officer to the time you're at the closing table should be about 30 days. If you were told that the VA loan takes too long, it doesn't take any longer than any other loan. All right. It does not. It depends on how fast that company works and then how quickly you can turn in the documents that they request. Okay. Now, it's all up to you to research what companies you're going to choose. I would ask, hey, what's your standard closing times on this? And can you guys do it quickly? All right. Closing costs. We're almost done. Last few slides. Closing costs. Yes, this is a no money down loan, but there's closing costs to all home transactions. Somebody's got to get paid, right? Closing costs come in 3 buckets. The title and escrow fees, title insurance fees, document fees, recording fees at the county. You can't get around that. Prepaids, property taxes. Whatever county you're in, you're going to have to pay property taxes up front to put into escrow. Homeowners insurance premium, same. You're going to have to put a little bit up front to put into escrow. These 2 things you cannot get around. Let's go over lender closing costs. Loan discount is up to you. Okay. What a loan discount is they're going to say, hey, at your credit and income qualification, you qualify, let's say, for a 3% rate. But a 2.5% rate is available at a discount point, right? But you have to pay for that. That's up to you. Or if you want to get money back for closing costs to help out with closing costs, you can take a higher rate. Let's say you take a 3.25% rate and they'll give you money back. And transparent companies will show you the rate sheet and what you'll get back and how much you'll have to pay. Appraisal fee, it varies from state to state, not lender to lender. Funding fee, we already talked about. Now let's talk about loan origination. Loan origination is 1%. So you see a lot of ads. They tease you with the low rates, right? We could get you a 2.25, but in an asterisk with this comes with a 1% loan origination. 1% of the loan, $300,000, that's $3,000 right off the bat. Then they're going to tack on probably a processing fee and an underwriting fee and an admin fee and all these fees. I will tell you a secret. Do not pay any lender fees. There's 2 ways banks, lenders, credit unions make money. They make money on the front end when they can convince you, yes, you have to pay these fees. They make money on the back end when they service your loan and get that interest, or they're going to sell your loan to another company. My loan, I closed with one company, got sold to Wells Fargo. Doesn't change my interest rate, doesn't change my payments. It just changes who I make my payments to. A lot of money is being made on that back end. No reason they need to make money on the front end as well. If you're working with somebody and they're charging you these fees, ask them to waive it. If they don't waive it, just say, okay, I'm going to go find somebody else, because there's a lot of companies that don't charge lender fees. I used my VA home loan 4 times before. I didn't know these were waivable. I paid them every single time and I got ripped off every single time. So do your due diligence. Most amount of money you're ever going to borrow in your life, right? You got to be loyal to you and your family. So try to find somebody that doesn't charge lender fees. They are out there. Last 2 slides. Builders. There's a lot of building communities here in San Antonio. I'm sure wherever you're at, there are as well. A couple of things. Before you go into that model home and talk to that agent, make sure you have a realtor, preferably with you. Again, you don't pay a realtor when you're buying a home, all right? The builder has already set that realtor's commission in their margins. So utilize the realtor to help you out with the negotiation. Remember, that sales agent in the model home does not work for you. They work for the builder, okay? So utilize that realtor. 2, be careful of the incentives and true costs. What I mean by that is they're going to tell you, hey, we have an in-house lender. If you work with them, we will give you $17,000 or $12,000 in upgrades or whatever. Be careful. The reason I say that is we did a brief at SAMC over here, the hospital, military hospital, about 2 years ago. A couple came up to us afterwards and said, hey, we are building with this company. They sent us the loan estimate. Can you take a look at it to see if everything is legit? And we did. They were promised $17,000 in upgrades to utilize that lender. Check the sheet. When interest rates at that time were 4.1%, they were giving them a 5.1% interest rate. So they jacked their interest rate up 1% to offset the cost of the $17,000. We circled it, told them what to say, sent them back. They ended up getting the 4.1% rate with $12,000 in upgrades. So just make sure you know where that money is coming from, all right? Last thing is beware of the property taxes on new builds. Property taxes on new builds, here's how it works. The first year, there's no building to assess, right? Possibly. There's probably no building to assess. So they're just going to assess the land. The second year, after the home's complete, the second year, the tax is going to be assessed on the land and the building, right? So you might have a jump. My situation, I built here in 2016 in San Antonio. First year, $800 in taxes. Second year, $8,000 in taxes. Now, luckily, my lender and my builder both told me, hey, this is what's going to happen. This is what your payment is going to be when that hits. All right. I've seen a lot of people that don't get that information. They're not told. Their payments go up $750 overnight. And I've seen some people lose their homes because of it. So you need to make sure you're asking the right questions on property taxes. Last slide, streamline refi. All right. If this is a very, very good program. Streamline refi is where you could, they only look at 4 documents and they drop your interest rate from the higher rate to the lower rate, whatever's available. Okay. Very good program, but be mindful of the junk mail. 210 days after you make your first payment on the VA loan, you're eligible to do a streamline refi. Okay. Now, about 180 days, you're going to get a ton of junk mail. Throw all that crap out the window. I mean, they're going to make it look official, like it's the VA stamp, VA approved. They're going to tease you with the low interest rate, but they're not going to tell you how much that interest rate costs. They just want to get you on the phone. Throw all that crap out. Go back to whoever you're working with originally, or call one of us and we'll help you out. All right. Another thing you have to take a look at is savings on a monthly payment and long-term interest. Just because you're only saving $75, it might not seem that much, but $75 deducted from the principal of the home could mean thousands of dollars over the life of the loan and interest. If you're going to sell the home in the next 2 years, do not refinance. Why? There's closing costs involved on a refinance too, okay? There's a funding fee on a refinance. Funding fee on a refinance, if you have to pay it, is 0.5%. So you may pay $4,000, $5,000 in closing costs. So if you're at a 280 balance, if you're going to go up to 285 and then try to sell the next year, you're losing money. All right, just go ahead, just hold on to it and then sell the home. If you're going to keep the home for 4, 5, 7, 10 years, if you could get a 0.5% reduction in your interest rate, is usually going to be a good deal. All right. Any questions about anything we covered? Anything?
I think we've been able to answer the questions, most of them in the chat, Tony. But let me just go back through and make sure that nobody has put any more questions in. And if you do have some questions, make sure that you put them into the chat right now. This has been amazing information. Oh, so we have a question from Bruni Garcia. She says, I get a lot of junk mail for the streamlined refinance, and she has a 20-year loan. Can you do a streamlined refinance for 20 or 15 years?
You can do whatever you want, whatever. And if you are told, if that bank or lender you're working with tells you no, that's probably because they won't offer it, right? So you just got to shop around.
Okay, great. Thank you.
Yeah.
What other questions are there? This has been amazing information. I will say that as we always tell everybody when we talk about finances and changing focus, it is up to you to do your due diligence. I can't think of anything that Tony has said today that's going to get you in trouble, but rules change, things change from state to state, county to county. And so take what you have learned today and use it as a starting point for do your due diligence. Yeah.
And I posted Michael's information there. So if you need more information on this process or the VA, the streamline refi or anything like that, if you're in the process now and you have a loan estimate you want us to take a look at, we'll take a look at it. No problem. We're just tired of veterans getting ripped off, right? And not taken advantage of. And now that we know the truth, we want to make sure we spread that.
And Dixie added into the chat that she added $200 a month towards the principal of her loan, and she cut the length of her loan by 7 years. She was able to pay her house off early. So that's another reason that, correct me if I'm wrong, Tony, that'd be another reason to possibly do a refi to lower your rate besides your money, is that then you have money to pay bills with, but you could still add some back into the loan and pay it off earlier.
Yeah, you can pay whatever you're paying now, refinance it to a lower rate, but still pay the same payment, put the additional to the principal, and then,
So lots of things that you can do with it. Thank you so much. I appreciate your time today, both of you gentlemen. Look forward to talking to you again in the future. Let me just pull. I'm going to leave Michael's information here up for as we close out. Thank you so much. LTI community, LTI family, I'm going to be sending out the links to this recording to make it easy for you to find. And Margie has a question. She says she's still confused by the 2-tier entitlement. So since we still have a couple of minutes, can you address that, Tony?
Yeah, second tier entitlement is all going to be where you're going to buy next. Like say for example, if your home, now if you pay down your loan, it's not going to be that amount. It's going to be the original amount that the VA backed. Okay, and you download your certificate of eligibility, and it's going to tell you exactly how much that they charged you in entitlement and how much the loan amount was. So you take that amount and you subtract that from the county loan limit, and that's going to be how much you have left over. If you want to find out how much you have on your certificate of eligibility, and just email Mike and tell him what county you're going to be buying in, we can easily give you that number. But we just need the loan amount and the entitlement that they charged you. Any other questions? Uh-oh. Annie, I think you're on mute.
Annie, you're muted.
Thank you so much. So I have put a link to a survey in the chats, both on Facebook, on YouTube, and on LinkedIn. And this is one way that you can say thank you to Michael and Tony for their time today, is by filling out the survey. And please put in the comments, please put Military Liaison Michael Hunter so that they know where the survey came from. Anybody else have any questions? Looking on all the platforms, we got it going in 6 different directions here. Okay, so thank you so much, gentlemen. I really appreciate you. We are going to end here. And if you, those of you who listen to this recording, if you have more questions, either reach out to the address that you see here on the screen, and we've also put it in the chat, or you can put your questions into the chat wherever you find the recording, and we'll be monitoring that and get the questions to Michael and get an answer to you. So thank you very much. Hope you all have a happy Thanksgiving, and we'll see you back here, same place, same time, 4th Tuesday in December, to talk about taking care of yourself over the holidays. Happy Thanksgiving, everybody.
Thank you.
Happy Thanksgiving.